If you just found out an IRS revenue officer has been assigned to your tax case, stop before you call him back, before you fill out any paperwork, and absolutely before you let him into your home. Watch this video first. What you do in the next 48 hours can either resolve it or make it substantially worse. Hi, I'm tax attorney Chad Silver, founder of the tax law firm Silver Tax Group. We are huge tax nerds, but tough as nails when necessary. We've been handling revenue officer defense cases for 20 years. We'll build your IRS defense, submit your IRS defense, and defend you against the IRS. If you have this issue, call us now. Don't wait for a consultation with a smart person who knows tax and will give you a no BS answer. Revenue officers are not assigned to everyone. The IRS has automated systems, letters, notices, even automated levies that handle most collection cases. But when those fail, or when the debt is large enough, complex enough, or involves unpaid payroll taxes, the IRS sends a human being. That human being is a revenue officer. If one has been assigned to you, you have a serious IRS problem. And this video is specifically for you. Drop a comment below if you just received an IRS Letter 725B or got a phone call from a revenue officer. I want to know how many of you are out there dealing with this issue right now. All right, first, let's clear up a confusion that trips up a lot of taxpayers because these titles sound almost identical. A revenue agent audits your tax return. They examine your income, your deductions, your records. They're looking for mistakes or unreported income. An audit is a revenue agent's job. A revenue officer collects money. They're not reviewing your return. They already know what you owe, and they're there to collect the money. Here's a simple way to think about it. A revenue agent is like a detective reviewing the evidence. A revenue officer is like the repo man. They already have the judgment and they're coming to collect from you. These are two completely different IRS divisions with completely different goals. If you mix them up, you may respond in the incorrect way, and that becomes a problem. Now, what can a revenue officer actually do? Well, they can do quite a lot of stuff, and I'm not going to minimize it. They can levy your bank accounts. That means your bank freezes your funds and sends them directly to the IRS. No advance warning required after the initial notice. They can garnish your wages. If you're employed, they can contact your employer and direct a portion of every paycheck to the IRS. They can file a federal tax lien, and this is a public record that attaches to all your stuff, your property, real estate, cars, financial accounts, and it could affect your credit and your ability to sell or refinance anything. They can seize assets, vehicles, equipment, real estate, business assets. This is rare in a last resort, but it is a legal tool they do have. They can also issue summonses compelling you or third parties like your bank or accountant to produce records or appear for an interview. This is a serious amount of power that they possess, but here's what keeps it in check. Revenue officers are not law enforcement, and let me say that clearly. They carry a badge-style credential, technically too an HSPD 12 card and a pocket commission, but they have zero arrest authority. They cannot handcuff you. They cannot detain you. If someone claiming to be an IRS revenue officer threatens to arrest you, that is either a scam or a serious misrepresentation. They can't enter your home without your consent. If one shows up at your door, you can politely decline to let them in. This is your legal right. And critically, you don't have to speak with them without representation. The moment you say, I am represented by a tax attorney and all communication should go through them, they are legally required to respect that. More on that in just a minute. If this video is helping you understand your situation, hit the like button and subscribe. It helps other people in the same position find it. If an IRS revenue officer has been assigned to your case, one of the first things you'll receive is IRS Letter 725-B, the Notice of Appointment. This letter tells you an officer has been assigned, gives you their contact information, and typically includes a deadline to respond. It almost always comes with Form 9297, which is a document request. This is where the revenue officer lists the financial records they want from you: bank statements, business records, payroll records, asset documentation. This is a formal, time-sensitive request, and ignoring it is not an option. But how you respond and what you produce matters enormously. Do not respond to Form 9297 without professional guidance. The documents you hand over frame the entire collection case. Here's where a lot of taxpayers make their single biggest mistake. The revenue officer will ask you to complete Form 433A. That's for individuals, or 433B for businesses. These are collection information statements and a detailed picture of your income, expenses, assets, liabilities, and ability to pay. And here's the big trap. The revenue officer may sit across from you at your kitchen table in a coffee shop and ask you to fill out those forms right there. Why would you do that? Some taxpayers comply because they feel like they have to. They don't. This form determines your payment plan. It determines what the IRS considers your ability to pay. If you fill it out incorrectly, if you underreport expenses, fail to claim certain allowable costs, or don't structure in the right way, you could be locked into a monthly payment plan that's financially impossible for your situation. You can't afford it. Do not fill out Form 433 without a tax professional reviewing it first. This is not a form you fill out in 20 minutes. It's a financial disclosure document that can follow you for years. Trust fund recovery penalties. Now, for business owners, especially those with employees, I need to talk about the trust fund recovery penalty, because this is where revenue officer cases go from serious to totally devastating. When your business fails to pay payroll taxes, the employee income tax, and FICA that gets withheld from paychecks, the IRS can hold responsible individuals personally liable for 100% of those unpaid taxes. Not just the business, it's assessed to you personally. And it doesn't matter if the business has closed. It doesn't matter if you filed for bankruptcy. The trust fund recovery penalty is not dischargeable in bankruptcy. The IRS can come after your personal bank accounts, your personal assets, your wages. And who qualifies as a responsible person? It's broader than you think. It's not just the CEO. It can be any officer, any partner, any accountant, or bookkeeper who had an authority to pay and willfully didn't. If a revenue officer is on your case and there are unpaid payroll taxes involved, the clock starts ticking on a TFRP assessment. This is the most urgent reason to get tax representation immediately. Your rights and what to do now. Let me give you something actionable to do today. Number one, you have the right to representation. The moment a revenue officer contacts you by phone, by mail, or in person, you can tell them, I am represented by a tax attorney, preferably me. Please direct all communications to my representative, write down their name, badge number, and contact information, and then call your attorney. Number two, do not fill out any IRS forms, especially Form 433, without professional review. Don't sign anything. Do not produce documents without understanding what you're producing. And number three, don't ignore them. This is the other side of the equation. Ignoring a revenue officer does not make them go away. It accelerates the timeline to levies, liens, and seizures. You need to respond, just respond the right way with representation. Number four, if you received IRS Letter 725B, look at the deadlines on the letter and on Form 9297. You likely have a short window to reply, so you got to act now, not next week. A revenue officer on your case is not the end of the road. Taxpayers resolve these situations every day through installment agreements, offers in compromise, currently not collectible status, tax court, or other strategies. But the earlier you engage a professional, the more options you have. If an IRS revenue officer has been assigned to your case, Silver Tax Group can help. We're a national tax law firm with tax attorneys who handle IRS collection cases every day. We'll review your situation, explain your options, and represent you directly with the IRS so you don't have to face this alone. Visit silvertaxgroup.com to schedule a consultation. It's confidential, and it's the most important call you can make right now. Please give us a call at 855-900-1040. And if you found this video useful, please subscribe. We cover IRS collection issues, audits, tax debt resolution, and taxpayer rights.